So our webinar today is Avoid Penalties and Save Times Filing the IRS Form 5471. And let's go to the first slide and get started. What are the rules for filing a 5471? Nice place to start. In a very big overview, the 5471 is about Subpart F and Subpart F income, and you only get Subpart F income if you have a controlled foreign corporation. So the first question to ask is there a controlled foreign corporation in sight or on the horizon by connection in some form? And if the answer is no, there's no controlled foreign corporation here, then you will not have to file the CFC, and you can tune into one of our other presentations. However, if there is a controlled foreign corporation in sight, you may have to file a 5471. Who does have to file the 5471? Well, let's look first whether or not we have a controlled foreign corporation. A controlled foreign corporation is a corporation where more than 50% of the vote or value is owned by United States shareholders on any given day. Notice that test is more than 50%. If you have a deadlock, there's no controlled foreign corporation. More than 50% gives you control, and there is control. Foreign corporation, and it's controlled by United States shareholders, so the IRS says now we ought to be able to get enough information to know what's going on inside that corporation, because the U.S. people control it, and they should have an interest in providing that information. But notice it's United States shareholders, not United States persons. There's a difference. A shareholder is defined for this purpose. A United States shareholder is a person who owns 10% or more of the vote or value of the foreign corporation. So the 50% test is a test where you have to be more than 50%. The 10% test is a test where if you have 10% or more, you're over the threshold to be a United States shareholder. So basically, you could have, if you have 10% shareholders, you're going to have more than 50% of the corporation controlled by U.S. shareholders, and you're going to be a controlled foreign corporation. What are the rules? We went the wrong direction here. One of the complexities about applying the 50% rule and the 10% rules are that there are ownership attribution applies in determining whether or not you own a share of a foreign corporation. For stock attribution, if you own a share of stock, it's attributed to you, that's obvious. But also if a foreign corporation owns a share of stock, it's attributable to the owner proportionately to that ownership. You own 90%, you get 90% of the stock that the foreign corporation owns. You own 10% of the top level company, you get 10% of the stock that the top level company owns in a lower level company. You also apply family attribution. Anyone who's been through the tax program knows that family attribution is in section 318A of the code, and family attribution is applied if the result of the attribution is to cause a U.S. person to be treated as a U.S. shareholder. So if he pushes you over the threshold of becoming a 10% or more shareholder, you get attribution. You don't attribute for a family member from a non-resident alien, and the partnership rule is a little different than the stock or the corporate rule. If you own more than 50% of a partnership, you're treated as owning all of the stock that the partnership owns. Less than 50%, you own proportionate share of that stock. Just to look at some of the problems that come up with information in trying to prepare a Form 5471. Let's just look at a couple of the pages from the return. It's a short return. It's only 4 pages long. There are 3 fairly significant and heavy schedules that are separate from the return. This one, the earnings and profits, is a part of the return that is part of the actual 4 pages. When looking at the 5471 in the controlled foreign corporation, who has to file a 5471? We just talked about having a CFC in the picture, so when just having a CFC around, who are the filers? Well, I had a slide. I wanted to have a slide here, and I didn't make it up. Sorry, but about IRS counting. The IRS counts from 1 to 5 in a funny way. There are 5 categories of filers. Only it's really 4 because the first one's been repealed. Also, the IRS can't get them in order of importance. They have them out of the order. So what I want you to imagine here is that rather than counting 1, 2, 3, 4, 5, that you count starting with 4, then you count 5, then you count 3, and then 2. So it's 4, count up to 5, then go back to 3, and then count to 2. That's the order of importance for people who file this tax return. A category 4 filer has to file this Schedule 8, and a Category 5 filer has to schedule this Schedule H. The Category 3 filers and 2 filers don't have to bother. Why is that? Well, the 4 is the most important category of filing for 5471 purposes. I call this the CFC maker. It's a person who has to, who owns more than 50% of the stock of the foreign corporation. So you see why it's a CFC maker. We just went through the slide that showed that a CFC is a foreign corporation that is 50% or more owned by a U.S. shareholder that owns 10% or more. So if you have one shareholder that owns more than 50%, and it's a U.S. person, he owns more than 10, obviously, he owns more than 50, so he automatically makes the thing to be a CFC. If you have one of those super shareholders at that level, that's a Category 4 person. The IRS figures that person should know the most about the foreign corporation and be in a position to report and turn over that information to the IRS. The next in that counting sequence was 5, and the 5 category filer is the person that is one of those shareholders that causes the foreign corporation to be a controlled foreign corporation. So the 5 category is for a 10% or more U.S. person shareholder of the foreign corporation. The Category 3 is sort of like the Category 4, except it involves somebody who's changing status. So if they're moving into the status of being a U.S. shareholder, they are a Category 3. They're going from a less than 10% holding to a 10% or more holding. Or if they're dropping the other way, going from a 10% holding to a less than 10% holding. The IRS wants to know, and they're considered to be a Category 3 filer. Category 3 filer may also be a Category 4 filer, in which case they have to provide all the information of both the Category 3 and the Category 4. So we did Category 4, Category 5, and Category 3. Now, the only missing category there is Category 2, the least important of these filers, and that's a person who is in a position to tell the IRS who are the shareholders of the foreign corporation. The Category 2 filer is a U.S. officer or a U.S. director of the foreign corporation, and the IRS figures that those people will have the information to be able to tell you who are 10% or more shareholders of the foreign corporation, and that's essentially what they have to report. So now going to these couple of pages of forms. The earnings and profits are important in concerning Subpart F income. That was Schedule A. Excuse me. Schedule I is the schedule where the actual Subpart F income itself is reported. There are only 8 items of Subpart F income reported here. Basically, when you have a foreign corporation, under Subpart F, it divides all of the income of the foreign corporation into 2 parts. Part 1 is Subpart F income, and that income is income that has to be taken into account by a U.S. shareholder and reported currently in the year of ownership. The other part of the income of the foreign corporation is active trader business income. And active trader business income that is not considered to fall into any one of the bad Subpart F categories may be deferred, and you don't have to pay tax on that income currently. It's just accumulated offshore until the foreign corporation pays a dividend or a distribution or otherwise makes that money available to the U.S. shareholder. So here on this return, you're reporting then the tainted part or the bad part of the income that is treated as Subpart F. Essentially, Subpart F income is passive income, income that doesn't have any particular connection to a foreign country where it is earned. It's not active trader business income, and the IRS basically assumes that a shareholder that's investing in a corporation that produces a lot of income that's not foreign connected in some particular fashion could have done that in the United States, and it's just trying to get the advantage of deferral. So they say you cannot defer. It's treated as if you had earned it currently and as if that foreign corporation made a dividend distribution to you. You get credit for any foreign taxes that were paid on that earnings that are distributed to you, and for that part of the corporation's earnings that are not Subpart F income, you'll get those foreign tax credits later when the income is eventually distributed out. There are lots of complexities of Subpart F. I don't have time to teach all of Subpart F income today, but I'm giving you the 10,000-foot high overview. The next form, Schedule J, is one of those special schedules in addition to the 4 pages of 5471. It's a very complex form, and if you have problems, if you're dealing with a foreign corporation who is facing the requirement of filing a 5471 for the first time, this is one of the areas where you're going to have to pay particular attention, and you're going to have particular issues. You're going to have to try and reconstruct the history of that foreign corporation as to how much income was earned year by year and how much foreign tax credits were paid year by year through the past in order to be able to know that if there's accumulated active trader business income of that corporation that is not subject to current taxation, exactly what year that income came out of and what are the foreign tax credits that are associated with it. So I just wanted to show you those forms because they're very, very complex. And there's certain basic issues that come up in dealing with Form 5471 that relate to sort of data quality issues. One of the problems in the data here is that you're going to have to convert from the foreign accounting system that your foreign corporation uses to GAAP-associated accounting techniques. Further, you're going to have to convert from the foreign functional currency of that foreign corporation to US dollars, and you may run into problems with trying to get historic data from the foreign corporation. If the foreign corporation has another corporation that it owns, or it owns an interest in a foreign partnership, you may have to take into account the way that the transfers between the family of foreign corporation worked in order to show the corporations. Furthermore, one of the forms in the 5471 is a form that requires you to report related party transactions. So you're going to have to figure out, you're going to have to look at transfer pricing issues. If there are goods or services that are sold by the foreign corporation to a related U.S. party, you're going to have to do a contemporaneous transfer pricing study in order to be able to determine what is the proper price for those related party transactions. Whatever in the 5471 is going to be binding, is going to show the IRS your pricing technology and approach, and when it comes time for a transfer pricing audit, that's going to be where the IRS starts looking. Excuse me, before we go to that next slide, I want to point out that this isn't a cheap process. Acquiring all this information about a foreign corporation takes time. You're gonna run into a difficulty if you have a foreign corporation in terms of getting the tax return put together. One of the best things that you can do to avoid penalties in this situation is to start early and to try and start getting that information put together. You might even want to, if you're just starting a new foreign corporation or with new U.S. investors, keep a double set of books, one in U.S. dollars and one in the local functional currency. You may want to be keeping a set of books in GAAP. Don't leave this for the last minute. It's important to try and get this information put together. One of the things that happened, when the requirement for filing the 5471 goes back, I believe, at least into the 80s and possibly earlier than that. When I first started my tax practice, there were relatively few 5471s actually filed. The penalty was $10,000 for failure to file, but it was very rarely assessed, and most people got around the penalties, and there was little enforcement of this area. Back in 2010, about the time that the FATCA rules were put out, the IRS got even more serious. They got serious in in the late 90s and in 2000s about trying to collect this information, but they're very serious today. And so they changed the rules about the filing of about the applying the $10,000 penalty, and they're no longer as generous in excusing it. One of the things is that the $10,000 penalty applies even if no tax is due on the connected return, so that I've seen accountants who say, well, we don't have to worry about going on extension, we don't have to worry about being a little late in filing this return because there's no tax due, so if we're a little late it won't matter, there'll be no penalty. However, if it involves a 5471, you've just caused your client a $10,000 penalty. You don't want to do that. Make sure that you get those extensions in. Make sure that you get the job done in time to file the return. The automatic penalty came in about 2010, as I was saying, along with FATCA. But now what that means is that if you were a tax filer and you're a corporation, so you're filing the Form 1120, and you were late in filing the Form 1120, and a 5471 should have been attached to it, that the computer will determine that and will automatically generate a notice and mail it to you for payment of the $10,000 penalty. It is now, the IRS is now, well, that's produced a flood of penalties and a flood of taxpayers who are appealing those penalties. I have one of my clients on appeal for the penalty. It's been on appeal for more than 6 months already. I talked just the other day to the person assigned to the appeal, and he said, Paul, basically looking at my desk right now and looking at the pile, I think that I will be able to get to yours in another 5 months, so in November, December. That's a long time for appeal. They are flooded with these appeals. But they have, nonetheless, they've gone forward, and in 2014 they started applying this to partnerships returns. So if you have a partnership return for one of your clients and the partnership return is filed late and there should have been a 5471 attached to the partnership return, you are also going to get the computer-generated $10,000 penalty. Well, we'll look at the pattern here. We see for U.S. corporations needing to be subject to the automatic penalty. You're seeing partnerships being subject to it, and I bet the 1040 and individuals will be next in line. Other penalties associated with the 5471, there's a continuation penalty. So if you get a notice that you have a penalty for late filing the 5471, you better start work on getting it done, because there's 90-day notice period for the for not having filed, and after that, if you continue not to file or not to completely file, there's a additional $10,000 penalty for each 30-day period, up to a total of $60,000 penalties. The continuation penalty, the extra $10,000 penalties, cannot be excused on a basis of reasonable cause. There is no, the IRS states there is no reasonable cause for the continued violation. In addition to the $10,000 monetary penalties, there are penalties for the corporation for non-filing the 5471, for loss of the foreign tax credit. If you are a larger corporation and you have foreign tax credits, not just from the CFC, but from other foreign activity, you lose 10% of all of your foreign tax credits. It's not restricted just to the ones that are connected to the CFC. Finally, and this is particularly nasty, it's one of the reasons why this form has been called the scariest tax form ever. If you fail to file your 5471, the statute of limitations does not start until that 5471 is eventually filed. Well, that's pretty usual for a tax return. But the other thing is that it doesn't start on any item on any of the tax returns that are associated with the 5471. So, for example, if you have an S corporation and you fail to file the 5471 in connection with the return of the S corporation, every item on the S corporation remains open until that eventual 5471 filing that you may not even know you missed. And not only that, but all the shareholders of the S corporation, every single item on every one of their returns stays open until that 5471 it comes in, even though the items on the shareholders' returns may have nothing to do with the S corporation, let alone have anything to do with the S corporation's foreign controlled corporation. If you get a penalty for failure to file 5471, look at the first-time abatement rules for penalty relief. Normally, you might not think of this because the first-time abatement program states that it does not apply to event-related situations, and the failure to file return is defined as an event-based filing. So normally you could not get first-time relief for failure to file or late filing, but you can in connection with the 5471. There's particular relief. I think it's probably connected to the fact that these automatic penalties are being generated, that you have the ability to get first-time relief. So take a look at that. But you have to have these two qualifications. You have to have that no penalty was assessed on the related form, whether it's 1120 or 1040 or 1065, and no penalties have been assessed on the no international penalties have been assessed in connection with his foreign taxpayer in the prior 3-year period. In addition to the argument that you qualify for a first-time abatement, you may also be able to make the argument that there was reasonable cause for non-filing. I generally believe that, and I think most IRS agents believe that there's no such thing as reasonable cause the way the IRS defines it. There's no special definition of reasonable cause for the 5471. It's basically, you know, the general rules that apply for reasonable cause. Even if you have to make the stretch and you have to make the argument that it's a reasonable situation, even though technically you know that the way the law is written, you don't quite make it all the way to reasonable cause. But you can submit a written statement under penalties of perjury, setting forth your articulate argument as to why you have reasonable cause for failure to file your return. There is one tweak or one additional thing about reasonable cause in the 5471 situation, because the penalty is imposed not just on the failure to file the return, but also on failure to file a complete return. So if there's omissions from the return you might have filed on a timely basis, you get to argue under special section of the regulations that the omission was not meaningful in some fashion, that it did not affect the amount of tax due, or it was incidental to the amount of tax and would have been discovered, so the omission was not putting the service in a problem situation. Whatever you want to argue as substantial compliance, if the return is substantially complies with the requirement and shows most all of the information, there will be no $10,000 penalty for failure to file. Well, I think we're now I want to thank you for being a great audience, and we're now ready to turn to some of those Q&A questions, if you have any submitted.
Sure. Okay, Paul, this is Anthony. And let's see. Yeah, by the way, that was just a tremendous overview, a very complex subject. So I've been continuing to learn a lot, but here goes a question, which is how long, in your experience, does it change to GAAP?
Well, that depends on the size of the company. If you're looking at and the nature of the records, you know, different kinds of tax issues would be different amounts of time. But you know, it could take weeks or a month or so. You got to leave yourself more than the last couple of days before you file a tax return. You're going to have to track down the information relevant under GAAP, and it may not be the same timing required that was relevant locally. You got to take a look at the rules. Okay. So it's a tough question to answer.
Yeah, without the specifics. And here's another one. My 1120 is late. What should I do? RE 5471. With regards to 5471.
Well, be prepared if you file a Form 1120 late that if you've had a 5471 attached to it in the past, or whether it's fairly easy to see that there's a foreign-controlled corporation that this company is a shareholder of, you're going to face an argument over the $10,000 penalty. Get the return in, get the 5471 attached to it, provide some nature of explanation there, but basically wait until you get the letter indicating that you have a late filing penalty. Then what you should do is determine whether or not your letter comes from the office in the IRS that is the field, or whether it is from the special office dealing with the computer-generated penalties. If you get a computer-generated notice, there's a different place to file the appeal. You can look in the Internal Revenue Manual, and you'll get directions as to filing in the right place. If you file in the normal penalties appeal process, they'll refer it over, and you'll lose 2 or 3 months' time in getting this thing resolved. So take a look in the regulations. It's a little obscure as to where's the proper place to file. And basically use the Internal Revenue Manual as a guide for that. Best arguments that you can make for failure to file, you make the argument again for first-time abatement if that's available to you, but don't stop there. If for some reason the first-time abatement argument is not granted to you, and I've seen them denied, then you're going to want to have a backup argument in the appeal, and so make sure that you get the rest of the appeal done. And then do the usual things: file the appeal, file it in a timely manner, keep records of the date of the mailing so that you can have proof of mailing and get the appeal in during the appeal period.
Okay, excellent. Excellent. Here goes one more. Can we complete the 5471 without a transfer pricing
study, or without? That might be the next word there. A 5471 has part of the form requires you to show transactions between related parties. If you have no related party transactions, and the only interaction with the foreign corporation by the U.S. owner is the fact that they own the share, then the transfer pricing would not be terribly relevant. But if a U.S. corporation owns 10% or more of a foreign corporation, and the two do business at any level with each other, you're going to want to identify that relationship. If there's a loan, or if there's a management service provided, or if there is a sale of a product, you're going to want to determine the transfer price and do some level of contemporaneous study in order to determine that price. Often a good, to get one of the major players to give you a transfer pricing study is going to cost well in excess of $25,000. So you got to weigh, the level of your business activity, the size of your corporation, and the level of compliance that you're capable of providing. But even a short form transfer pricing review would be better than nothing.
Okay, great. Okay, here's another one. Do I need to attach a 5471 to an 1140?
1040 tax return, or 1120. I'm not sure the 1140 return. It doesn't ring any bells in my brain. But yes, it has. If you are a U.S. If you fit any one of the 5 categories that I mentioned, you are a CFC maker, more than 50%. If you are a U.S. shareholder, 10% or more of a foreign corporation, or you are a director or officer of the foreign corporation, controlled foreign corporation, then you should be filing the 5471 and attach it to whatever tax return you're filing to report your income. If you're a trust, it's the trust return. If it's a tax, it's the tax return. I mean, if it's a corporation's corporate return, partnership return, whatever return you file. If that's the return to file, report your income, you have to attach the 5471 to that return.
Okay, thank you for that. And here goes another one. What does substantial compliance mean?
Well, that we hit at the very end there is the issue is term substantial compliance is specially defined in terms of the 5471 penalty under the 6038 regulations, and it means there that if an item is omitted from the 5471, you may be able to escape the $10,000 penalty for having filed an incomplete, failure to file or filing an incomplete 5471 generates the penalty. Leaving an item off the return is going to generate the penalty. For this particular, if you leave 5 items off the return, it's still 1 incomplete violation, not 5 incomplete violations. You get one $10,000 penalty. But if you can show that you have made a good effort, a reasonable effort at identifying all the items that were requested from you, and you've taken the best approach you could with the data available to provide the information to the IRS, and that no tax was hidden or escaped, you may be able to demonstrate substantial compliance with the requirements of the return and therefore be able to get out of the $10,000 penalty.
All right, excellent. Okay, so no more questions that I see coming in.
Okay. Well, again, thanks everybody who came today. Anthony and I really appreciate it. We intend to provide this seminar again on another occasion, and we're planning on adding to the seminars we provide. If you have any questions or any comments, we would gratefully take those. So we're all looking at always looking at ways that we can improve and provide you with more of the information that you need. If you have any follow-up questions that you didn't get a chance to ask today, you can ask me, Paul Wigg-Maxwell. Call my office number, 973-507-9760, or send me an email, paul@wigmax.com. Again, that's Paul, P-A-U-L, at Wigg, WIGGMAX.com. Thanks for attending the seminar today. I hope you enjoyed it.